Good morning and welcome to What Matters Most. This is my video series where I take a financial topic which has usually been put to me by somebody out there, so thank you for that. I take a topic and talk about what matters most to you. Now the idea being is that finances are quite personal, they're very emotive, and they're very different from one person to another. And what I don't want to do is go down into the specifics of any particular topic, because it really needs to be something that needs to be talked about on a much more of a one-to-one level. But what I do like to do is put a high level on things and talk about some of more generalised aspects of a particular topic. So today we're going to talk about investments. Now, I'm not regulated by the Financial Conduct Authority to sell investment products, but that's not what I'm here to do. I'm not looking at suggesting that you do this, that or the other, because there's actually no point, because each person has a very different reason for wanting to invest. Some people might want to invest in stocks and shares, some people might want to invest for capital growth, some people might want to invest for an income. And it's all very, very different. So the idea is that I'll just talk you through the kind of things that you should look for when you're looking at an investment strategy. And I do get lots and lots of questions about this, and I think the trouble is it can be a minefield. There are lots and lots of different products out there, all for very, very individual circumstances. So I think the best thing for me to do is actually to try and get you thinking about what's best for you. So what you need to do when you're looking at any investment strategy is, first off, look at the downside. The downside will be, in most cases, unless you are investing in a product which comes with the backing of the UK government, is you're looking at a total loss. So if you can afford to lose something, then that's fine. Go ahead. If you can't afford to lose something, then you're going to have to start thinking about a different way to try and earn some money on things. And first of all, what you want to look at is, and I'm sorry, got a bit of a visitor in the back there. So first of all, what you want to do is look at your attitude to risk. If you are prepared to lose the lot, there are products out there which have high risk. Now with that, the high risk will carry a higher reward. If you're not prepared to lose a penny, you will not get that much in return. It's how things work. Everything works on a risk-reward basis. You need to be clear on what you are happy to lose, and you need to be happy to lose it, because in any of these kind of scenarios where you're looking at putting an investment strategy in place, the value of your investments can and will go down. You've only got to look, and this is a very current example, you've only got to look at what happens today. If you had invested your money in sterling, you would find that today you are sitting on a bit of a loss because of the uncertainty around the potential exit of the UK from the European Union. And the reason for that is that markets don't like uncertainty. Markets don't really like knowing what's not going to happen or what might happen next. They want more certainty over what's going on, because then people are more confident in investing. And the thing is with this is that usually sterling is seen as a bit of a safe haven. You tend to see people, certainly of late, invest in the UK an awful lot more because it's seen as a growing economy. Now, obviously, nobody knows what's going to happen should the UK vote to leave the European Union, and therefore you've got a bit of uncertainty going into the market. So, two things we've covered: risk-reward and your attitude to losing your money, and then the uncertainty around the market. And one of the things that you need to consider is whether you're looking for something where you can put your money in, it sits there, and you will get what's called capital appreciation, where your money grows, the initial investment grows, or whether you want something which is going to pay you out an income. So you're looking at the difference between, say, buying a house, living in it, seeing it as an investment, not getting too attached to it, but when you know the market has increased, then you sell it and you get capital appreciation. In the meantime, you've not earned any income out of that house at all. That is then looked at against an income scenario. So if you wanted to buy that house and earn income from that house, then you don't live there, you go and live somewhere else, and then you can rent it out and earn money from it. So these are the kind of considerations that have to come into play. There are various different ways in which you can invest. You can invest in the property market, you can invest in the stock market, you can invest in any kind of investment trust, which is actually linked back to the stock market and how well a business is performing. You can do something like peer-to-peer lending. This one for me is quite an interesting one because my background is actually traditional bank lending. So this to me is kind of a growing part of the economy. It's really, really interesting, but it doesn't come with any real safeguards to it. So it is quite a risky way of doing things. But I would have to say, I think the absolute surefire way of investing is to invest in you. You can go out there with the best will in the world, have some money put aside, be prepared to lose it, have a really good strategy, and then do something like what's called a layering investment strategy, where you have some money in a low risk so that you know you're not going to lose that part of it, some money in a medium risk where you'll get a slightly higher return, and then some, just a small part, in a high risk but high reward type of asset, and you can have the best strategy ever. But do you really understand how the decisions are being made that are actually affecting the money that you're going to get back, or the money that's going to give you an income? So for me, the very best way of investing is to take on that decision making yourself to a certain extent and invest in you. You are the only person that can actually have control over the way that your money is then spent. You have got that control over the income that comes in. And what I'm saying here, I guess, is give yourself some surety. Look at ways in which you can generate some cash. Look at ways in which you can become your own boss, because I think it's really, really important to try and get that control, because with that control over what's going on in your life, you then get the control to know that you're not going to have to worry about somebody making a poor investment decision for you and all that money that you've struggled so long to earn and to save. You're not going to worry about what's going to happen in the stock market, what's going to happen on the currency markets, because you know that you have got your plan to earn yourself some income. All an investment is putting some money or some time into a project which is aimed at getting you some growth in the original money in order to pay you back for the money that you've invested. It's really easy. What you put in then allies back to what you get out of it. And I actually personally think that there are so many different financial products on the market that it's really difficult to make a decision which is the right one, because the products change, the markets change, whoever's making the investments decisions on your behalf, they may change their sentiment towards certain different things. Maybe, for example, they like looking at what's called the blue chip industries. You might find that all of a sudden they've changed and they like small businesses, which is a great sector to invest in, but it's high risk, high reward. But it's only by having some of that control and bringing some of that control back into your life that you know there's a little bit more certainty there. So this is a very, very quick guide to some of the investment strategies that you can use. But again, comes with my caveat: the best person and the best plan to invest in is always you. So any further questions, please get in touch. I'm more than happy to answer any questions that you care to put my way, and if I can't, I will find somebody that can. But in the meantime, please do keep them coming. I do find your questions incredibly interesting, and I really am here to help. Please do get in touch. Just remember, it can be done on the Facebook page via a private message, or on Gmail, and my Gmail address is minimizingyourfinancialrisk@gmail.com, and I look forward to speaking to you again soon. Bye for now.